Ira Epstein of Linn Associates with your Saturday financial market wrap-up, and this is for November 14th, 2020. All right, my friends, I think the markets gave you a big edge in telling you what they're doing. We came into Friday and the markets in the financial arena had to make some decisions. Going into the weekend, were we more concerned about the surge in COVID-19 that is ramping through America in a massive way, beating the numbers we saw in the spring? Or is the market going to look beyond that and say, we have a virus coming, it'll come sometime between the end of this month and probably be into the mainstream by April? Those seem to be what the market's decisions were. And what the market has decided to do with this big run, especially to new highs, is it is saying to you that on the pullbacks, and there'll be pullbacks in the markets, on the pullbacks, the market is going to use the news that creates the pullback, probably the COVID-19, for the traders to be buyers. Do I know if I'm right? I don't know, but I think I am. You don't get this kind of rally into a weekend where you know these headlines are coming. So I think you have to build that type of thinking into your trading ideas. As for the energy markets, no, they're still stuck on the idea that the COVID-19 is the opposite. It's going to hurt demand going forward until that vaccine is in the marketplace. Big problems. I just saw over the weekend that in the UK, petrol and diesel cars will not be sold after 2030. That's a decade away. That's not far away. So they're going to the electric vehicles. Energy market's still getting a bid. And while we've had a good bounce off the lows in the bonds and note markets, well, it's a bounce. So far, it's not a real change of anything. So let's take a look and see what I mean by that. First, in the S&P on the monthly chart. Is there any arguing you're at new all-time highs? No. Is there any arguing that the COVID is worse? No. Do we know that President Trump is now going to be ending his term and we have a President-elect Biden? Yes. It's that simple. So you have all these factors built in, and this is how the market's doing so far for the month. When we look at the weekly charts, the correction that we had, and let's come back a couple of weeks. Here's a week ago, this is November 6th. This was the week prior. The market had come down into this low right through here. And then the market took itself off, and this is where you're at right now. Very strong reaction to everything. Obviously, going into the election, the break, after the election, the rally, and we had talked about that. Now, the next market I look for in this is what? Santa Claus. America typically gets a Santa Claus rally. Why will this be any different? We get all the rampage of the COVID-19 now, and I can just envision that we already have the first shots taking place by Pfizer at that point in time. So I'm building this into my psyche. By the way, I don't analyze charts on psyche. I analyze charts on charts. But I like to have an idea of what I'm expecting, but you've got to put them in compartments. You got to keep your thoughts here, but the chart action there. When I look at the weekly bar chart, I take a look at this action, it's bullish. You have higher lows, higher highs. But what was it last week? Let's get rid of this. You had lower highs, higher lows. I said this week was the week, in my opinion, that determined things, and this move did that. So until the market gets back under 32.25 on a charting basis, this market's in the bull camp. When you look at where the 18-week average of closes, one of the things I teach in my charting course is the market often fights a battle at what I call the line in the sand, which is this number. That's what it's done. And with the swing line combination, you have the higher lows, and now you've got, as you can see, the higher highs. I'm very comfortable that now I think the market on breaks, 33.75, a big support zone. That's quite a ways from here. It's 200 points away. As for the Bollinger Band, well, each time you've come up to a Bollinger Band, you have in short order failed back. Take a look yourself at these numbers, you will see. So why should this be different? I don't think it is. So I look at the market. I'm certainly not bearish over Bollinger Bands. I'll let somebody else own the markets over them because the odds favor you're going to get pullbacks. It's on the pullbacks that I'm interested in the market. When I look at momentum, it's up. So I have the swing line up. I have the trend up. The market's over the Bollinger Band. I'll wait for it back, but I think the pros are going to wait and not deep breaks. I think they'll be buying off the COVID announcements that drive markets down. Then there'll be something else that comes with the shots from Pfizer, and boom, the markets go back up. That's where I think you're at right now. In the NASDAQ, momentum turning gradually up. The pattern on the chart on this week resolved itself. Now you have the higher lows and the higher highs in the chart. Prior to this, let me show you what you had. You had lower highs, higher lows. This week is so important with what it did. Like the S&P, you got up to the upper Bollinger Band, and this time the market failed against it. That's what I normally expect. Then it starts pushing on it to drive it higher. In the Dow, same thing. The market, let's take a look at it without this week. Higher high, lower low. Now the market comes up. Did it change its pattern? No. The Dow is the one market here that it doesn't seem to want to be in a trend. It's got that lower low, higher high staying within the markets right here. Okay, I'll wait for it to set up the way I'd want. Am I bearish? I'm certainly not bearish. It has a bullish bias since it's over the 18-day average. Momentum's up, but it's not the cleanest chart. Am I friendly in the Russell? Oh boy, yep. The small caps are on fire. The small caps had a bullish crossover on the chart here too. The market then went up, made its higher high. The market is looking right now at an overbought condition, not embedded. And yes, remember I told you I'm now going back to embedding. Weekly charts can embed. I came up with the idea. It took me a long time, probably 2 years, to figure out how to handle that, and I got my arm around it. Anyone that thinks that on charting you're not always learning and always looking back, boy, are you wrong. You're always learning and always trying to figure it out, and you have to adjust to the markets, and the chart does that. You're the one that has to adjust to what's going on. Being over the upper Bollinger Band? No, I'd never chase a market over that. You go back and look at how you might have fared if you did that. Under here, this huge break, that's why I stepped back. You can drop like a son of a gun. That means you can rally like a son of a gun. That does not mean when you're over a Bollinger Band you're going short. It means that if you're long, you're peeling positions, you're not adding them there. There's a big difference between the two thinking, but you're bullish still. In the 30-year bond, you're running the lower Bollinger Band. Why? This market, I think, is telling us a story. It is telling you that the market is looking already beyond COVID-19 into financial relief and other parts that are going to hit world economies, not just the U.S. And interest rates, as much as the Fed wants to keep them low, will have a tendency by the public to think that they should be going higher in rates, not lower in rates. You never fight the Fed. On the other hand, what is the Fed's determination on keeping them low? What is too high against that definition? That's what you have to look at. Same thing in the 10-year note. The market is under the Bollinger Band, then it pops back to it, but notice it's not staying any longer over that band. This is sideways action, right? A pipe. I'm calling that a top. So until the market clears that number, at which point I will be a chameleon and flip bullish. I'm in the bear camp overall, looking for just what I said. I think the market is now looking beyond COVID-19. In the dollar index, I think the market is making a decision, but I'm in the bear camp on the dollar because it's staying under the 18-week average of closes. The bias is flat here, not oversold. You don't have the trend per se. You've got the higher high, lower low. In this very light gray, I decided to put up the 200-week moving average of closes today. And the reason for that, I wanted to see if the market does lift. And you catch the shorts, you get over this 94.33 for whatever reason happens, where might it go? That would be about the max I'd see in the market. That's a big move from here. I'm not saying that will happen. I did the opposite in the eurocurrency. If you take a look, you see 114.47. So if the market breaks through that bottom, that's it. Neither of these markets are trending. They're developing their trends as I'm talking to you. The daily chart in the dollar, by the way, did turn bearish on Friday. Canadian dollar, let's go back. If you hit a Bollinger Band, just like in the stock indices, I don't care if a couple of them stay over it. The percentage play is when you hit it, the pros take money off the table. That's what I'm saying. Am I bearish? No. Is the market maybe going to correct? Yep. If it does correct, I see support in these two areas, the 18 and the 100-week moving average of closes. Momentum could drop down, but momentum doesn't have to do much. It's already not overbought. The market last week, the market had been in overbought territory. I define any move with a stochastic reading over a 70 is overbought. There's a way to deal with embedded readings when both numbers get over 80, but you're not there. So when we get one, I'll talk about it. So I'm seeing major support there. Basically, this is in the camp against the US dollar too. And in the yen, wow, what craziness this market had. A big up day. Outside week up on November 6th. Remember again, you only stay over that Bollinger Band 5% of the time. On an up week, if you take out the low of that week, the week after or the week after that, 2 weeks after maximum, the objective is to get to the closest moving average or a Bollinger Band, the closest of. Market went through it, hits that number, and right there. That's the objective. You're not in a trend in this market. It's in a transition, looking to see what happens. Bitcoin, way overextended up here. Am I bullish? Yeah, if you're looking at the daily chart, you know that, but that doesn't mean anything. This market has a tendency to do that. You'll see this over and over if you get into areas that I've looked at. See, even here. So each market's got a bit of a different tendency that you look back in time to see, but it doesn't stay over it very long. That's the whole goal of the algorithm. Is that bearish? No. It means that the pros are probably taking some money off the table. There's a lot of talk, $20,000 Bitcoins. This market set itself up on the last what? On that last, there's a word they use and it skips my memory. It's when they have again that all the computer power is still only going to produce now half the amount. So there's a finite amount of Bitcoin. Again, to me, it's a useless piece. It is a value. It's different. When we come out with digital currencies, and the central bankers talked about it this week, Ms. Lagarde, Mr. Powell talked about it, the Bank of England central banker, Mr. Bailey talked about it. It'll be a different look. It'll be something that the central banks can use. Is it coming? It is coming. But it won't be the Bitcoin. Bitcoin will be something different. In WTI crude, Brent and WTI, the differential's now favoring on a closing basis Brent. It's getting stronger than the WTI. We added another 10 rigs this week, by the way. The market in this is now no trend in the Brent. You got a higher high, lower low on a weekly basis. Here's a failure. Learn from this. You have sideways action. What do I define as a breakout? I define a breakout when the market goes down like that to have at least 2 weeks in a row where the market closes on a downside breakout with the lower closes in the bottom quadrant. So I needed the next week to do that. It didn't do it. So this was an attempt at it, and now the market's in a failure. You're still back into the overall sideways action. The same thing happened in the WTI crude. Again, no trend that I'm seeing in that market. Rebob gasoline. Same attempt, identical failure in the chart action. So you put it together, you come up with game plans. And that's what I offer you each morning. At 5:40 a.m., Monday through Friday, I come out and I give you the daily charts, what I'm seeing, buy here, sell there, what are my ideas in the market. The idea is that you bounce your own trade ideas off of this. I also put out special reports for my subscribers. I'm going to cover short-term, swing trades, and longer-term. Where do I cover the longer-term? You're watching it. Okay, this is one of the ways. This is YouTube. Wait till you see the subscriber video I have. 40 charts with very long-term ideas. So you get your ideas here. This is the feeder into the subscriber video. I hope you understand what I do with this. I'm covering for my subscribers all these markets in this exact sequence. There's a slide bar on the bottom of the chart. You slide the bar. It'll light up in big words, grains, meat markets, wherever you want to go. Each video is approximately 20 minutes long. So they're getting meat. They're getting a lot of meat. And as I said, a weekend edition on a Saturday, Monday through Friday, the morning editions, ex-holidays, and I think you'll find this to be interesting. The price, a cup of coffee, come on, $7.95 for 30 days. Give it a try, see if this fits in. If you get one idea every now and then from it, is it not worth taking a look at it? Come on. So where do you go? www.iraepstein.com. Go to the word research. That is where everything's at. I'm Ira Epstein. You have a great day. I will talk to you all Monday.